option gurus who are very dogmatic with the option strategies that they do, specifically in the option selling side, getting completely run over, like just month after month after month. And the people that follow them are losing all of their money because of it.
Welcome back, everyone, to Be the Trader. Today is going to be a very fun time. I'm here at my man Kunal's place here in Destin, Florida. We're having a good time. And he introduced me to a friend of his named Steve. And Steve is a trader. He's been trading for pretty much as long as Kunal has. And if not, maybe a little longer. And it's a really unique story, which I'm glad to share with all of you. You can easily find him on Twitter on Stephen Place, at Stephen Place. We'll have a link somewhere below. Well, Steve, welcome to the show, brother.
You're doing great, man. Is this your first time?
See, you would think. I mean, I literally just started tripping up. And I was like, I guess this is like my first time doing this.
Oh, that's amazing. Yeah. No, I'm super excited to be talking with you. I've seen your YouTube channel. It's very good.
Thanks, man.
Content, very rich, actionable content. Every single interview that I see on there, too.
Dude, thank you for saying that. I appreciate that. I appreciate that.
So you start with the neg, and then you give the compliment, and then you just suck them in like that. Yeah, that's how I work.
I appreciate it.
Yeah.
Well, look, I'd love to know just like, how did you get started? Like, what called you to the world of trading to begin with?
Okay. So in 2005, I was at the University of Central Florida, and I was getting my degree in electrical engineering. And I ended up at an internship at a defense contractor. Everyone's seen the movie Office Space, where it's like, what exactly is it you do here? And it's like, I get the requirements from the customer and talk to the engineers, and that's what I did, and it sucked. It was awful, and it turns out I'm a really bad employee. So I started, doing some financial speculation on the side, and I discovered, it's really funny how I discovered this, because I was renting a college house at the time, and a piece of mail came for a previous tenant from Options Express. It was their broker statement, and I'm like, oh, what is this? I've never heard of this. And then I Google it, and it's like, oh, that's cool. And I go into the library and I start reading about options. It's like, this is the same math that I am learning with my degree. It's the same bell curves, it's the same odds and everything else like that. So that's kind of how I got into it. I started working for another defense contractor for about 2 years. And during that time, Web 2 started to show up in force. And I got a Twitter account, and I started talking about the markets, and basically realized I'm a terrible employee. And
at this time, you were already trading, and you were
I was already trading, and this was back when oil was going parabolic to 150. You had really nice moves in PTR, which was China PetroChina, which at the time,
around what year?
2007.
Okay.
This was when it ended up having a bigger market capitalization than Exxon. All right, so that was pretty close to the top on a lot of stuff. So I was trading Valero, Monsanto, all those commodity names, and the bottom absolutely fell out. Into that market crash, I talked with my friends over at StockTwits who were just starting up, and they said, hey, do you want to run a newsletter? And I was like, yeah, sure. So I quit my very well-paying engineering job, moved to Mobile to get closer to family, and that's kind of how I got started. So I was thinking that I know it all, and I'm going to start telling people about stuff, and I definitely didn't. And to a point, I still don't now, right? But now I know what I don't know. Back then, I was some, dickhead hotshot guy out there. So from there, my primary strategies in the options market tended to be more towards the option selling side of things.
Okay, what does that mean?
So a lot of people, when they talk about options, they're like, what's the best option strategy? Right? I get that a million times. And it really is, it depends, right? But generally you can break them down into, do you expect prices to move significantly away from a price? So you want to be a net option buyer. Or do you think, reversion, or at least the slowdown or liquidity is going to get introduced? You want to be an option seller. And so I primarily focused on option spreads, mainly verticals. That's where you buy an option, you sell an option. The only variation is the strike price.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
So you get, you don't have to be an absolutely perfect market timer, but you can earn a reasonable return on those trades in a very short amount of time. And so that was my main bread and butter, and other variations with that. I would be doing non-directional income trading like calendars and butterflies and iron condors and things like that. Really, really advanced stuff.
Yeah.
So that was working well. And then around 2015, we had that time in which the S&P traded at about the same price for like 6 months.
Okay.
Right, and that was like the golden age of vol selling and option selling. And then the Chinese, they did a surprise rate adjustment in August 2015. You had a hard push to the downside. Then you had the taper tantrum after that. And along with that, one of the struggles that I ended up having was my daughter was born, and I was not able to properly manage my family life with a kid screaming on the other side of the door and running newsletters and running my own money and things like that. And, the wheels started to fall off a little bit for me. So that was kind of my dip. That was my struggle area. And then after what I realized, it was around 2018, we had the OCDES 2018, just absolute careening lower crash. And I got smoked on a lot of things simply because I was not, as an option seller, you're making a little bit of money, and if you get a couple bad losses strung together, it gets really ugly. And then that was, so even before 2018, you had that 2017 bull market where it was just marching higher and higher and higher without any kind of pullback. And that is when I evolved a little bit and said, I need to start owning a lot more convexity. I need to be a net option buyer in a lot of these cases. And so that has significantly helped me in my trading, switching a little bit more towards the aggression and saying, you know what, I need to, instead of trying to get too complex with these option trades, I need to just pick a direction and run with it. And so in terms of strategies, my strategies have absolutely shifted and evolved over the years. Just it's a function of what the market's giving us right now. So I've been in a lot more what we would call long gamma trades, convexity trades, looking for very, very fast movement because the market liquidity kind of sucks. And so you get a lot more price action. Okay. And so after 2018, I realized I needed that in my life. 2019 went by, and then 2020, this was hilarious. I tried to be really smart on Facebook. And I said, guys, and this was in February. I said, guys, you're probably going to start hearing about some sort of virus out of China. Kunal literally just broke his wine glass while I'm trying to tell this story. This is.
I appreciate that. We're going to keep that in just to see, because that's how real life is.
Yeah.
Go ahead.
Feb 2020, I went on Facebook, and the post is still up. It's like, hey guys, look, this virus thing is probably going to be a nothing burger like it was in October 2014 with the Ebola crisis. What you really need to worry about is a repo window, right? And I looked like a complete idiot after that, but I knew that into 2020, like I'm seeing everything careen lower, and I'm like, I'm not selling a single option right now, and I'm going straight option buying. I'm doing straddles, I'm doing call ratios, and all these other super advanced witchcraft things that I haven't had the need to do in forever, and it was great. And so that kind of acceleration really helped. Because when you're a net option seller, it's great. You can get serious compound returns. There are some limits to what you can do with respect to liquidity and things like that. But you can also view it kind of picking up nickels in front of a steamroller,
Is it similar to shorting like pumps or shorting just overextended plays?
A lot of that can be, a lot of it can be reversion based.
Okay.
You can actually do very well selling spreads in a trend following manner as well. And that's, we can go into more of the intricacies of the options market, but what a lot of people, because I've seen it very recently with this bear market, a lot of option gurus who are very dogmatic with the option strategies that they do, specifically in the option selling side, getting completely run over, like just month after month after month, and the people that follow them are losing all of their money because of it.
Right.
So you just really have to think about the strategies in the options market that you should consider given the kind of market you have. There's always this, we talk about holy grail chasing. And I know with directional equities, everyone is like, if I just find this one moving average crossover, everything's gonna,
or something.
In the options world, it becomes even so much more compounded because you get the smidiots, the smart idiots like me, who think that they can outthink this market and say, I don't need to have a bias on the direction of the market. If I just systematically sell iron condors, I'm going to be fine.
Yes.
It doesn't work like that. And I think it's going to start shifting here where it's going to be a lot more of an option selling kind of market. But you just have to kind of recognize when those shifts are occurring and change your strategies as needed. And I know that's kind of a cop-out thing to say for a lot of people where it's like, what's your strategy? And it's like, well, it really depends. And I know that's very discretionary and it gets kind of weird in the options market, but that's just kind of what you have to do.
But you've been around for a long time in terms of trading. So all those years of experience really shows you've been through the ebbs and flows, different market cycles, different just times of the market. You traded right before a big crash more than once.
Yeah.
And so because of that experience is helping you understand, like, you just evolved as a trader, and a lot of people don't really have that experience yet.
Right.
So what would you suggest to people who don't have that? It's like they're only here for a year, right? They're trading for a year. It's 2022 this year. It's a bear market. It's their first time trading. Like how do you really, knowing that, how do I really apply that, or at least make sure I'm careful enough? I don't know what the right words are, but you know what I'm saying?
Because I have given like advice and coaching ideas for a very long time as well, and it's hard to kind of pigeonhole that and say what's one piece of it, because the advice is dependent on the person and what their personality profile is. Like there are some people who they can trade momentum stocks to death, right? But they would not do reversion particularly well, right? Because it's just not their personality and it suits them. So if people are like, how do I, what's the best moving average, crossover, whatever? It's like, well, it just depends on what you want. So in terms of, I think for the options market in particular, if someone really wanted to do the work, they could define a systematic option strategy and just go into Thinkorswim and use their think back feature and just walk through. And it doesn't have to be like a strategy every single week. It's like, how does a 60 DTE iron condor, 15 delta iron condor work in every single market? And then you're going to see that work through and you're going to say, wait a second, let's just say the VIX is above 25. I probably don't want to sell premium, even though the premium is rich. But it's like, if you actually trade through that, it sucks because the realized vol is so cranked relative to the premiums you can collect that it's not worth your time as much.
It's so interesting. Anytime I talk to someone who talks about options, just me personally, it seems very more complex. Like where as on the stock side, you really don't dive into like strike price and all of this like time decay and I'm like, why would someone go to options? Like did you ever do stocks or did you just straight options?
I did stock. I mean, options are great when you don't have a lot of money. Starting off.
Okay, gotcha.
So the leverage works. Like you can, when you sell credit spreads, you can start with $1,500 and you're going to make 150, which doesn't seem
$1,500. So that's really good.
That's pretty good, right? And that can scale, and those are fairly high odds strategies. A lot of people don't know how to run. They don't know how to run stops on those things. One of the issues that you can get into, especially with smidiots like me, I will try and overthink this market entirely too much. And I will try and make some super complex option strategy that tries to capture everything. And it's like, bro, just buy a call. You know, sometimes it's a lot of people who try and outsmart the equities market using options are because they are not comfortable enough with their trading strategy to pick a direction. Right? And they'll say, oh, if I just sell these options, I'll collect the theta. What I've found is that an opinion on the direction of the market matters the most for most option strategies. Even
of course, yeah.
A lot of people don't think
stocks,
this way.
Like it's important.
Well, a lot of people don't. They say, okay, let's say Apple. Where's Apple trading right now? Anyone know?
It just broke out. I think, yeah.
All right.
In the fit one. Yeah.
So you say, okay, if Apple pulls back to 130, I'll go sell the 115, 110 bull put spread. So as long as, and this is, here's the worst thing you can do. You can say, as long as Apple stays above 115 going into expiration, I'm going to make money. And as soon as you say that, the trading gods will descend upon you and show you how wrong you can be, right?
Yeah.
But if you put on that spread, you're going to collect a theta of about, $1.50 a day or something very small, and your delta is like 10, which is your directional exposure.
Okay.
So if Apple is moving 2 points a day, your delta variance is 20 versus a theta of 1, right? Maybe you should learn how to pick stocks and time the market a little bit better than trying to find the most optimal option strategy you can.
Yeah.
Right? Because that's going to be the most important thing.
But that's like everyone's doing that in every market, right? Like they're all looking for that one thing or narrow it down where they don't take losses or where they just trade something that's just, it can work in all markets, don't really have to worry about anything.
Well, with options, there's other dimensions of profit, right? You've got delta.
Yeah, because you're speaking this, and I don't really know the language in terms of options trading. I don't trade options. I just focus solely on equities. So, and it's it's my ignorance. But when you were saying theta and delta, I was just like, I'm sure this is important.
Yeah. So delta is directional exposure. Theta is the change of your portfolio, your position over time.
Okay.
And it could be long or short. Like you could make money over time, lose money, and then you've got vega, which is if implied volatility changes, there are all sorts of witchcraft there. So you can construct a vega position, or you can construct a theta position, but a lot of it really does come down to, are you gonna pick a direction on a stock instead of just trying to say, oh, if I just massage this perfectly, I'm gonna find a way.
Gotcha. Yeah. Well, you said something earlier too, man, and you said, I don't know, remember what the year was? It was probably 2015. When your daughter came to the picture, and you're learning how to trade, you're not learning how to trade, but you're trading, you're running your business, and you're managing your own portfolio, and then you're growing a family, and that stress. You said it was a little hard at first, right? So, how did you overcome that, or what did you do to help you, be able to manage it all?
I couldn't. It was about a year and a half. I mean, Kunal can attest to this. I mean, my kid was just on all the time, and she didn't sleep, and my wife and I both got postpartum something or another. And we ended up we closed up everything here, and then my wife decided to run New York Marathon, and so we got a temporary rental in Seaside for a month so she could run 30A while training, and then we drove up to New York with our kid, and that was our hard reset. So in terms of managing work-life balance, obviously I know how to do it now. Well, don't have a newborn, right? But finding those boundaries and finding what you need and the support network you need before the wheels fall off, right? So I'm not, I don't have a good answer for you for that.
Yeah, I'm curious. So I'm glad you said that. Yeah, because it's reality. Because someone out there might be dealing with this right now, and maybe you easily relate it to a lot of people, right?
Yeah, because it's you go out in public, you got a 9-month-old that's crying, and then some parent comes up and is like, oh, don't worry, it gets better, right? No one says that before your kid, right? Because then it would mean that it completely sucks right now. So, but yeah, I did not properly manage my work-life balance enough. And, I could have lost my edge a little bit in the markets because of that, and also because of shifting market conditions, too. So, all of those things kind of happened. It's a lot easier for me now with managing that because we moved, we're close to my family, we've got
help.
all sorts of stuff going on. So
that's really important too, because like you have help and you have trust within the family to help you grow and help you continue to focus on your business too. But you also said the when you start to trade and then you start to teach or run a newsletter, if you will, you thought you were like next sliced bread, right? Like you were killing it and you knew you just felt like you were doing really well.
Yeah.
And then you said later that I really wasn't, and I realized I need a lot more to learn. And now at least I know what I don't know, right? And so can you explain the difference between like those two mentalities? Because like there's a lot of people who are in that first stage, like almost all of us go through that.
Sure.
And so like, can you explain what that was like and the difference when you mean by like, now I know what I don't know?
So, what's the word? Epistemology, is that the study of how you acquire knowledge, I think is what it is.
I'm going to agree with you.
Yeah, I think I got the word right. So, it is very tempting, and it was back then, especially when Web 2 kicked off. Everybody's the member of the cult of Tim Ferriss. I'm a founding member. Everyone watched the Gary Vee videos and everything else. Yeah, I can do this. And I got on Blip TV and started getting drunk and talking stocks, and people were listening to me, and you're like, I'm an authority figure now.
Yeah.
And so that's great if you want to build an audience, but when you're speculating, it's completely different because sometimes it's just a bad beat. Sometimes you're not going to hit 100% win rate, but if you feel like you're going to look bad in front of people on the internet, then that can lead to really shitty risk management. And I know that sounds like people are like, oh, I would never do that. It's like, God, the ego of social media traders, myself included, it can get entirely too big. So what I do now, well, first off, I understand that like there's not one perfect trading strategy out there.
Right.
Like I have seen people with positive equity curves for fucking moon phases.
Yeah.
And it's like, okay, fine, cool. And people used to, this was really early, like people would just get in arguments over like which Fibonacci is the best or what, and it always happens. And I see it come on Twitter every once in a while. I'm like, that's, I have argued, it's been litigated already. No one cares.
Right.
And so when I think about the opinions I want to take, it comes down to the question, how would I know? Right? So right now in this market, one of my theories that I have is that China is screwed and that they're going to have to pump up their non-financial sectors, right? They blew up their internet companies, right? And Alibaba.
Can you explain a little more? I don't understand. I'm just not familiar.
Okay, so I don't know if you remember Didi, DIDI.
Yes, yep.
Yeah, it went to zero because China, they said all these online education companies, we're just going to kill them. Right?
Why did they do that?
Well, they IPO'd. This is Dale Gribble level tinfoil hat conspiracy theory stuff.
Okay, gotcha.
All right. They IPO'd on U.S. listed markets, raised a bunch of capital, and then the CCP came in and said, these companies are no longer a viable business. And Didi went to zero, and there's a couple others that have just been chopping around for a while. We have seen relative outperformance in these names to the point where I'm like, China screwed on the property side, so they can't pump up real estate, so they're gonna have to, do something else. And I think that they're going to start pivoting to these Chinese internet names again to try and just get something moving, right? And so that's a lovely theory, and it's like, okay, how would I know? Right? Well, EDU is about to crack 25 or 35. And that's one of those things. And so, I would be like, oh, here's this lovely essay on why I think all this stuff's happening on all this economic data. And it's like, okay, that's great.
Right.
Find a position and at least have a falsifiable thesis around it. And macro is very tempting to talk about to death, but you can't manage risk with a lovely macro idea on why one of these things is going to happen 3 years down the road.
Okay.
Right. One of the challenges I'm having right now is, because I have some good ideas, but how do I express those ideas for more than a 1 week period, right? Zoom at $300. It's like, okay, this is probably a short here, right? And then it goes to 30 or whatever it is now. And it's like, okay, why didn't I find a way to ride that all the way down? So now I'm thinking, you know, if there's going to be a pivot in this market, how would I know that the pivot's going to happen? And how can I ride any kind of expansion and upside volatility the best I can? Okay, so that's kind of the way I'm approaching things. So in a very long answer to how do you know you're full of shit or not?
Yeah.
Well, you start asking that question first. All right, that way you don't sound like some idiot 23-year-old who, you know, is fresh on Twitter talking about how the bottom's in or something like that. You know?
Yeah, 100%, 100%. Well, was there something for you that like really gave you a struggle, but something outside of trading helped solve that? You know what I'm saying? Whether it was like an exercise outside of trading or a routine that really helped improve something in your trading.
I mean, there's always the personal development stuff on the side.
Like what?
You know, like just assume you're in the NFL, right?
Okay.
What are you going to do in the NFL outside of football that's going to make you a better football player?
You train.
You train, off-season nutrition,
Yeah.
you know, getting your mind right, all that other stuff, you know. So I can't really think of anything specifically because you just jumped that question right on me.
Yeah.
And there's probably a million things, but it's just, I would think of it more instead of a single thing, like taking a step back, going, you know, let's go meta a little bit and say, what are the processes needed in order to re-input some of those things into your trading? So, you know, I can't think of anything off the top of my head. You know, anytime I'm, you know, being mopey and not going to the gym, I'm not going to do well, right? So the gym is something like I pay
You
a
go
lot
before or after?
I try and go after.
Okay.
But I pay a lot of money for a coach
Yep.
so I don't have to think about that kind of stuff. And
Do you find that helpful to like have someone, you know, make up the routine for you rather than you kind of make up the routine?
I have to now
Gotcha.
because I went through, you know, from 2019 to about 2021, I got the home gym and all that other stuff, and it does okay, but it's like, you know, I'm old enough to the point where I will get stronger and get injured, right? And it's like, okay, I have to not think about this. I have to remove my decision making from this, go find someone who's better at it than me and just say, do this for me. You know, that way, you know, there's a book, I'm not going to remember the guy's name. It talks about what's the QBR, what's your queen bee role in your business, right? What's the one thing that you have to do in order for your business to make money?
80-20 or something like that.
Something like that, but it's like, fuck everything else. You know, say, you know, if someone wants to schedule a gym day with you, maybe we need to, you know, maybe get like a secretary or something to get it in our calendars and pen it in or something like that. Because the one thing that we need to focus on is financial speculation, and everything else is, you know, just needs to get fixed elsewhere. So
for everyone who doesn't know, we're supposed to go to the gym before this happened, but we are not at the gym. We were recording this and then we break glass. This is and I messed up at the beginning. So this is like the funnest episode we've ever done. But with that being said, man, now looking back, if you can just immediately just take a time machine, go right back to the past to 2007 when you first started to really get going. How would you make that time, like how long it took, like way shorter? Like what would you be doing? What would you do different?
I would give myself a list of about 20 tickers and say, go start mining Bitcoin. That would be it. Like, because I've thought about this, I'm like, what if I could just go in the past and be like, hey, get a laptop and just start spinning this up real quick, or, you know, something like that. But going back, there was some famous, I'm sure he was a Roman. It was like Marcus Aurelius that had someone follow him that was like, just remember you're going to die or something like that.
Oh, yeah.
You know,
I think it was Marcus Aurelius. It was there or another gentleman, but yes, Socrates, one or the other.
Well, some fancy Roman guy that we sound really smart talking about.
Right.
But basically, it's like, no, you know, your shit doesn't stink.
Yep.
And you need to just have a little bit of, humility is not the right word, but just a little bit of perspective on, you know, how to manage things when they start to go wrong. And that's not even with trading and stuff. That is just, you know, that's risk management as a function of life.
Yeah.
You know.
Can you give an example?
So like hurricanes right now.
Okay.
What I've thought about this a lot is like how do you, because I talk about convexity a lot now, how do you manage downside convexity?
Okay.
Right? So like if you die, you have life insurance and that puts a floor on it for your family. You're reducing your convexity and things like that. So hurricanes, it's like, okay, you probably need to have a system in place already to say, here's my evacuation plan, here's all the crap I need in a notebook, here's
right.
you know, everything else that goes with it. So that would be a good example, like just in what we have to do in Florida. So, what was the question again? It was managing risk outside of trading.
Yeah, no, it was the whole idea. If you can go back and you can shorten the time period from going from 2006 all the way to now. If you could shorten that time period of learning, the learning curve, what would you tell yourself?
Okay.
And that's the main
Yeah. All right. So, in terms of the financial markets, I think I would tell myself to get into other derivatives and just straight equities a lot faster.
Why straight equities a lot faster?
There are edges that you can get outside of options. Because let me give you an example. Like, you can go buy 30 days out at the money option. The bid-ask spread is going to be about $10.
Okay.
Right? If you do 10 of them, that means your slippage could be $100.
Yeah,
right?
It could.
And that starts to matter a lot. And then it becomes more difficult to manage your risk and stops and things like that. When sometimes I just want a delta one position. I just need to buy a stock or short a stock because that is the way to express my position. Instead of doing all this fancy stuff with options, sometimes it's just like, look, just buy the thing. Mm-hmm. Looking back on it, I should have gotten into the equity futures market a little bit better, just because it's more liquidity, it's delta one trading, it's a lot faster profits, a lot more short-term profits, and there are edges in non-option listed stocks that you can't get with options. And especially now, like the way the options market is working now, everything is compressing to shorter duration.
Okay.
So everyone's crowding into weekly options and everyone's crowding into the same 15 stocks, right? So if you're trying to find an edge that is easily harvestable in the options market, it just takes a little bit more work to do that.
Gotcha.
So yeah, I'm doing a lot more equities, I'm doing a lot more futures and stuff like that now to try and compensate for that.
Oh, great. Well, look, Steve, I appreciate you so much sharing your story and let a lot of people know, because I know you share some great insights. If you haven't already, which I hope you already did, you already rewinded some of this to re-listen to it, because you dropped some great knowledge, man. I really appreciate that. Yeah, absolutely. If you want to quickly, let's just let people know, because I know they're probably like, hey, I want to reach out to him. I want to learn something. I want to ask something. How can they find you?
So I'm on Twitter at Stephen Place. I've got a YouTube channel that has a lot of really good content. If you want to know how the GameStop squeeze actually worked, I called it out the day before it happened. And all the gamma squeezes and stuff like that are on there. For those that want an advisory service, here's my one pitch. You can go to markettradersdaily.com and I run 2 services there.
Cool. Well, thanks, brother. Hey, man, I appreciate you.
Right on, man. Take it easy.